For years, Apple has been diversifying its manufacturing supply chain away from China. Apple's been selling iPhones made in India, AirPods from Vietnam, and Mac computers assembled in Malaysia. The strategy was a hedge for its supply chain after the company dealt with tariffs by the first Trump administration, supply chain issues tied to COVID, and chip shortages that revealed the risk the company was at by primarily producing out of China. But then on April 2nd, everything changed.
For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike. In a few moments, I will sign a historic executive order instituting reciprocal tariffs on countries throughout the world.
Not only did imports from China get a massive tariff, but so did the other countries where Apple set up manufacturing, although Trump did put a 90-day pause on tariffs for some countries on April 9th. Global markets plunged on the news, and Apple was hit particularly hard. From April 2nd to April 7th, Apple shares dropped approximately 15%, erasing nearly $640 billion in market value. However, following President Trump's announcement of a 90-day pause on new tariffs, the stock rebounded, rallying over 15% in a single day, although it did lose some of those gains again the next day.
Apple is in the eye of the storm. I don't think any company is more impacted by this tariff Armageddon than Apple. It's 90% of iPhones, 75% of its other hardware. And that's why for Apple, when it comes to China and Taiwan, this continues to be just an epic disaster. And that's why the stock's reflecting that.
Amid fierce back-and-forth tariffs between the U.S. and China, as of April 10th, the White House told CNBC Trump elevated tariffs to a staggering 145% on Chinese imports.
It's going to throw the U.S. into a recession. It's the most head-scratching, absurd policy thing that we've ever seen.
Even with diversification, Apple is still very reliant on China. Around 90% of iPhones are still assembled in China by Foxconn, which accounts for roughly 80% of Apple's total production capacity. China also handles 55% of Mac assembly and 80% of iPads. So what exactly do these tariffs mean for your iPhone, and what options does Apple have? Tariffs are taxes on imported goods paid for by the company doing the importing. The theory is simple. Make foreign-made products more expensive and companies will bring jobs back home.
Any product that comes into and out of a country, you're basically paying a tax. And ultimately, tariffs is what a country is paying another country to import goods. And the reality is, it's the U.S. consumer that will have to pay for this.
Right now, Apple designs its products in the U.S., but assembles almost everything abroad.
The reality is, if you want an iPhone made in the U.S. and you want that for $3,500, we should make it in the U.S. If you want it for $1,000, you keep it in China.
The iPhone 16 Pro Max currently starts at $1,199. At the lower April 2nd tariff rate of 54% on China, one estimate showed that would raise the price of an iPhone by $350.
We do believe that to offset the price or the cost of these tariffs in the U.S., Apple would have to raise prices kind of across the board by call it 17, 18%.
These tariffs will impact Apple. It will raise Apple's costs. And the most common way for a firm to recoup these costs is by raising prices. Now, if Apple does, sell a $1,500 iPhone or whatnot, that could really start hurting demand on the other side too. So there's a balancing act here. Apple can't just pass all the costs on to the consumer because maybe they'll stop buying iPhones.
The Trump White House claims Apple could just bring iPhone production back to the U.S.
We have the labor, we have the workforce, we have the resources to do it. And as you know, Apple has invested $500 billion here in the United States. So if Apple didn't think the United States could do it, they probably wouldn't have put up that big chunk of change.
But experts say that's easier said than done.
The global supply chain's built in Asia. China has been a linchpin for Apple's success as well as big tech. And look, to put some numbers, it would take $30 billion, 3 years, for Apple to just move 10% of the supply chain to the U.S.
Apple began manufacturing some iPhones in India in 2017. By 2024, India was exporting nearly $6 billion worth of iPhones between April and September alone. Apple also began producing iPads in Vietnam in 2022. But under the new tariff plan, imports from India face a 26% tax, and Vietnamese goods 46%, although many tariffs are paused for now.
iPhone is where all the money is, and they're not going to be able to shift enough of those supplies of those iPhones they make in India, bring it over to the United States. They're still reliant on China.
It's interesting, after the first round of tariffs going years back, how there was such a push to leave China manufacturing, go elsewhere,
Right.
go to Vietnam, go to Thailand. Well, okay, so that's sort of been thrown into flux.
Simply moving factories isn't enough. Apple's supply chain is global, and escaping China won't be fast or cheap.
You could produce things in Asia that's 95% cheaper than in the US. That's the nature of the global supply chain, whether it's clothes, electronics. US consumers want things cheap. It's labor cost, infrastructure, the nature of the workforce. It takes 4 to 5 years to build a factory. So where does Apple go in the meantime? They can't just call a factory in the US. Look, essentially Apple, their boat has been turned upside down. There's no life rafts. And it's a very, very dangerous and I think uncertain time.
Apple's next steps remain unclear. As of April 10th, the company declined to comment to CNBC.
Apple has not responded publicly, but I could tell you these tariffs go in, they stay for a month. You could be looking at numbers that get taken down 10, 15%.
The company is reportedly reviewing its supply chain strategy and modeling out tariff scenarios. In late March, Apple chartered at least 5 planes to fly iPhones and other products into the US, stockpiling inventory before tariffs took effect. That behind-the-scenes urgency stands in contrast to the company's public silence. No press release, no investor memo, not even a tweet.
Right now, it's unclear what Apple's going to do. Apple declined to comment, and they've been declining to comment on the tariffs so far. So right now, it's kind of a cipher what Tim Cook is cooking up in Cupertino to address this stuff.
On an earnings call in January, Tim Cook said, "We're monitoring the situation and don't have anything more to add."
For a company that is really seen as the poster child for getting caught up in these tariffs and this trade war, Apple really hasn't said much at all.
Apple's been pretty silent, though, to be honest, about what's going on with these tariff impacts, how they're thinking about pricing. iPhone pricing is going to be the most important.
It's also a sharp contrast to 2019, when Tim Cook personally lobbied then-President Trump for tariff exemptions and secured them. This time, no carve-outs have been offered. So far, Apple hasn't issued new guidance to suppliers or changed long-term forecasts. But analysts say they're watching 2 things closely: product cycle timing and lobbying.
Trump does cite Apple as a great American company and as a company that is investing in the United States. I think there's a good chance that Apple ends up getting exceptions too. So whether it's realistic, there's still a lot of possibilities right now.
Raising prices by $100 to $300 is one possibility, but it might be a tough adjustment in a market used to $999 starting points.
Apple is unlikely to raise prices between a product cycle, which means it would just wait for the iPhone 17 cycle.
The tariffs come at an especially tough time when Apple was already being criticized for falling behind in AI.
At the end of the day, it's smartphone, it's hardware, and then it's about the AI revolution into Apple. But if you lose demand destruction, that significantly hurts the future of AI.